Welcome to the Purpose Focused Advisor, a podcast for financial planners, advisors, and RIAs looking to get the most out of yourself and your business. Join Rob Brown as he walks you through a journey that will allow you to take action in your business and your life so you can be the best that you can possibly be. Now here's your host, Rob.
Time once again for the Purpose Focused Advisor. Rob Brown here, happy to be with everybody again, and in particular to be with Mark Hansen, who is the owner of Hansen Associates Financial Group, as well as a co-founder of White Rock Capital Management. And we're going to dig into both of those organizations a little bit deeper as we get into the conversation today. Mark, welcome to the podcast.
Oh, thank you, Rob. Glad to be here.
So, Mark, you've been at this a while, maybe as long as I have. You got into the business, I think, in 1989, I believe your bio said.
That is correct. Boy, it makes you feel your age a little bit, but yep, 1989 is when I entered the financial services industry. I have a degree in electronic technology, oddly enough, and worked in that industry before the financial services industry. And, numbers were my game. I mean, numbers came naturally to me. So it was a natural progression into this type of business. And I've enjoyed it ever since.
Well, Mark, I'll make you feel like a youngster. I got started in the industry in 1985, so I've got a couple of years on you. I've probably disappointing a lot of our listeners. They might think that I'm really just 25, but not really. Anyway, enough about age. So you talked about having an unrelated degree, but something similar in that both your degree and your first career were about numbers. What was it, though, that had you make that shift into the financial planning industry? Because the numbers are numbers, but they're a different kind of numbers.
Sure. I'm a very analytical person. I worked in an engineering background, and financial planning and financial services kind of go down that route in a different way. I mean, being an analytical financial planner, I enjoyed that. You're dealing with a lot of different components for people as far as planning and making a solid plan to attain their goals and objectives. And, in the engineering field, it's kind of the same way. We're looking for ways to solve problems and make products that were very effective and so on. So there were some similarities between the two. But what I really did enjoy in the financial services industry is working with people. I like people, and I like to work with them, and I like to help them. So being in this industry really fell well into my lap because I enjoy working with people.
So did you figure out that people part before you made the move, or was that a sort of a benefit of making the move?
As I was going through college, I owned a little small business, vending machine business, and I dealt in the business world as a young man, and all through my life, I was selling something that was effective. And so it kind of came natural to me for me to work with people, and working in the financial planning industry was a really good fit for me. I enjoyed helping people, and I had that business acumen. Maybe that was one of the reasons I left the electronic industry, is because you were more of a number and an employee, but you didn't have a lot of, other than your coworkers, you didn't have a lot of interaction with people and helping them in different ways. So it did give me gratification going into the financial planning industry.
So before we get into what you're doing with White Rock, talk a little bit about how your business evolved on the financial planning side with your own financial planning firm. Was there a target audience that you were going after, or something that you found was missing on the part of a group of people that you said, I can really help there, where I can connect that people part with the numbers part?
Not really, Rob. I mean, I think everyone that comes into the financial services industry, basically, they do have some goals and aspirations, and me going into it. And as you know, starting in the business is very hard. I mean, I was only, I think, 25 years old at the time. So, starting and building a clientele, helping people with their planning at a young age like that, who's going to listen to you when you're 55 or 60 when you're a 25-year-old kid,
Right.
especially at that age. I worked with family and friends in the early years. I felt I was very competent in helping them. And then that just kind of branched out from there to where I got referrals. And I was always good as a marketer, a prospector, to find people that needed my services. So as you know, you need to be very motivated, and you need to be focused and disciplined, and you have to have perseverance in this business. And, I knew all those things that had to happen, and that's what kind of started my business. And it was a good start.
So when you think back on building that financial planning side of your business, is there anything that really kind of stands out as being, hey, this was a huge success for me. I'm really glad I did this because that allowed me to do something else, or to build something, or to what are those things that were kind of markers of your success?
Well, I guess I put a lot of demand upon myself. I'm a very disciplined person, and I set high standards. So I was never, I guess I could say I was never completely satisfied, even though I was, in the companies I worked with, I was one of the higher producing type of advisors there, but I never had that satisfaction that, man, I made it, and I'm going to rest for a while. I always have been a driven person, so I always continue to work hard to build my business and continue to grow it. And I don't know if that answered your question you're asking me, but that's kind of my mentality in the business. And I think all advisors need to have that. They need to be very driven, be ambitious. You got to kick your own self in the butt sometimes. Sometimes the business isn't so fun, and you got to sometimes push yourself to get past that. I think, being an advisor in this world, some of the benefits is you're your own boss, but then again, you got to push yourself as a production, someone that can produce and produce results for yourself.
Yeah, no, I totally see that, and I saw that in myself through many years of my career as an advisor. But I also know from the conversations that I have with advisors, in fact, many of the conversations I have on this podcast, because we call it the Purpose Focused Advisor, that at some point that working harder just to work harder, or working harder just to grow income and revenues or AUM isn't enough. There's something that you want to be able to do because you've had success growing the business. Did you ever run into things like that where you thought, gosh, if I do this, I keep grinding, I keep working hard, keep building this business, I'm going to be able to accomplish some other things in my life, in my business, with my family, with causes that I care about?
Sure. No, good point, Rob. I guess the way I look at it is you work very hard to build that ability to do those other things that you may want to do. They call it work-life balance. Well, I've always been a very hard worker, so I still kind of struggle a little bit with that. But working hard through the years and building my business has allotted me the time and the freedom to do things other than just working in my business. and, doing things for other people, charity type of work or things that are as productive in a different way. And it's just not for earnings. And so I do enjoy that. I enjoy helping people out in other ways. And, I do a lot of pro bono work, even in my industry. I am a certified financial planner, so I do a lot of pro bono CFP work. And, I'm not always looking to just basically make earnings. I'm looking to get balance in a number of different ways. And through that hard work through the years, as you know,
Sure.
a lot to that flexibility in your life. And that's what's been very rewarding for me.
Yeah. I think sometimes that question that I ask can be a bit of a chicken and egg conversation,
Yeah.
because sometimes people need the motivation of knowing something that they're going to do as a result of putting in that time and growing that business. And others want to just grow that business so that they can do those things, even if they haven't predetermined what they're going to be. So let's shift gears, because I didn't jot down the year, but it's not that long ago that you started White Rock Capital Management with your partner, David Yelly. Am I saying his last name correctly?
Yeah.
Okay, David Yell.
Yeah.
So, so something obviously shifted in your thinking that caused you to say, I want to do more than just planning. There's a need in the capital management space for something. What was that? What caused that shift?
Yeah. So, over the years, as we help people when we help manage their assets, I did fee-based financial planning for many, many years, acquired clients, they had assets, helped manage their assets. And for the most part, I used third-party managers because I didn't have the time to manage the assets and do the planning and do all those components. So I used third-party managers. What I noticed over the years is that they all did fairly well when the market went up, but when the market went down, no one knew how to manage risk. And I thought, boy, if we look at what happened in 2000 and 2008, some deep, long drops in the market. And I thought, man, why don't these managers really know how to manage risk more effectively? Why go through these deep troughs in the market? So that's what brought the idea to me. I said, you know what? I want to build a tactical strategy that I could build and have in-house, that we do get proper signals of some sort to get out near the top of the market where things start crumbling down and start decaying and start, that big drawdown in the market. Get out near the top and stay out of that market until you see to where a bottom hits and a reconfirmation of an uptrend reestablishes. And so I had this vision in my mind that what I wanted. So David Yell crossed my path back in 2015. And I had this vision that I thought, man, I would love to have these tactical strategies. Well, he was the perfect guy that came across my path. David came from the market side of the world, the trader side of the world. He worked on the stock exchange floor. He worked for mutual funds, hedge funds. And he had this very in-depth knowledge of investments and how things work in terms of far beyond what most advisors understand. And I thought, man, David, this is my vision. And you're the guy, I think, that we working together can build these strategies that can be very effective. And, he traded on the futures markets, and I've just learned a ton from him. So I'm a very knowledgeable investor just from my experience and working with him. But we worked together to build these tactical strategies that basically did exactly what my vision was, hey, let's get out, stay out of these markets during the deep drawdown trends. Let's stay out until they turn the corner, and let's get back in. And we worked together for 2-3 years on developing the first models. And then we have done a lot of revisions since then. It's kind of like building a car, you're building it from the tires up, and it takes a lot of revisions to refine that, let's say, so-called product. And that's what we've done. And basically we developed White Rock Capital Management as an asset management company. So not only do I use our own strategies for my own client book, but we also make them available for other advisors to use. What I think that separates us from the masses out there is that we use active strategies, and it is rule based, and we're able to get out effectively out of markets through these rules that David has used for many, many years, and uses technical indicators that are give you very high probability of accuracy. And that is what makes us really unique. I've always said with people and their money is that, it hurts worse to lose money than it feels good to make money. Because, as as an advisor too, Rob, when people start losing money, man, oh boy, they do not like to lose money. And, everyone likes to make money, but when they lose it. So if we could bring something to the market that basically attracts them to show that we're just not a static investor, that we can tactically manage risk, that can give you overall very good compounded growth rates that exceed benchmarks. And that's basically the strategies and the models that we have built.
So I really like what you're saying, because I know, and I have not worked actively managing other people's money in a number of years. But when I did, one of the things that I was always very conscious of in our core strategy was, we don't have to make all the money when the market's going up, but we better make sure that we don't lose all the money when the market's going down. And I think over time, I've worked with, a number of advisors and money managers who do that who do that well, who don't have the big swings. And obviously you saw those too, but there was something about doing it in this tactical way that you talked about that was important. Dig into that a little bit more, because you could argue, I'm sure people do as you have conversations, well, I can do what you're doing some other way with third-party managers or with mutual funds or ETF,
Right.
or whatever it might be.
Right. No, most people can't do it. Kind of what we have, you find in the private equity lines out there, it takes you $5 million to get into. There are strategies out there like that, but it takes a lot of money to get into them. So we've brought strategies to more of a retail market that people could participate in. But you made some good points, Rob, on as far as participation on the upward side of the market and participating in the downside. That is some of our key, let's say, attractive nature of our strategies, is that, our 50-50 model, which has 50% exposure to the market and 50% fixed income. Well, we may capture 80% of what a balance index will do on the upside, but we only capture like 6% on the downside. So when those downsides come in the market, they could obliterate your compounded growth rates, totally, basically eliminate a lot of the growth that you may have seen for 3 to 5 years. So managing the downside risks of the market are the key components to what I feel successful investing. It's not always about performing in uptrending markets. It's about how you manage the downside. Right. And that's where we excel and get some good high compounding growth rates because of that.
Yeah, that's great. So I'm going to kind of shift gears in this conversation a little bit, because I was thinking as you were talking that, you've kind of brought an institutional investor in David into White Rock. And then in turn, you have kind of shifted from being a financial planner, doing mostly individual client work, and you're now in this money management space where your clients aren't just your private clients; they're also other advisors.
Yes.
What have you noticed as you've made that switch? Name a couple of things that have surprised you on the plus side and some things that maybe have surprised you on the, on the downside?
Yeah, good question. Because it was a interesting shift from, basically attracting clientele for my own private client group to where now I don't prospect for for clients. I prospect for advisors. That's what I do now is I talk to advisors pretty much all day long. So it is a paradigm shift completely. It was a breath of fresh air because I've been doing the other side for so long, and it was a shift in the business model for me. And I do enjoy doing it, talking to advisors, because I could talk a different language to them because they understand a lot of investment concepts. And one thing I think that I bring to the table that's very valuable for advisors to work with us is that I've been an advisor for over 30 years. So I understand client psychology and what they think about money and how they should invest extremely well. Where a lot of your investment management companies, you may deal with inside or outside wholesalers that don't truly understand what we do as advisors. They understand, you go out and here's our products, go out and use our products for your clients, but they haven't had their boots in the trenches, so to speak. And I have, and I think why my story comes across well to advisors is because they says, "Oh, I know you understand all this stuff." And I designed a PowerPoint presentation that I provide to these advisors, and it tells a story because I understand the story, and it walks them down this education path with their client on how to manage risk and why managing risk is important. So. It has been a shift from, searching clients. Now, I still take clients in my own personal RIA firm, but it's only by referral. I don't go out and market for new clients. But primarily, most of my activities and duties are working with other advisors. And what do I get out of it as far as the gratification is if I could help an advisor bring in more assets under management and provide them better tools to build their client book. That's what gratifies me. That's what I get out of it. It's the same way, being an advisor, helping personal clients achieve their goals is very gratifying in the business. Well, I get that same gratification by working with advisors that help them help their clients. So it's an interesting paradigm.
Right. No. Well, we share that passion in our businesses then, because that's why I love doing what I do now, is because helping advisors become better at what they do, become better versions of themselves personally and professionally is very rewarding. And but it's different. It's different.
Sure.
And I would have to say, and I've been at this a while, so I've kind of figured out how to do it. But that I thought it would be easier to make the transition because I was an advisor who understood the landscape, that it would be easier to transition into coaching and consulting and training, that I wouldn't run into the skepticism that maybe an outsider would run into. But I was wrong. It was harder. That the experience was beneficial. Many of my clients will tell you that's why they work with me, is because of that experience. But it also doesn't give you a free pass. Have you found the same thing?
Absolutely. Good points. Going into the advisory world and working with advisors, it's not like they were just going to lay down and become our new clients so we could manage their assets. And it's still a challenge. And, I guess that's one of the things that motivates me every day. It's if things are too easy, then there's not enough interest in it sometimes. There's got to be challenges, and it reminds me a lot of the earlier years building my my client book. Now I'm building an advisor book, and it's the same type of challenges. It's very as a younger asset management company, our hurdles that we have to overcome is we're not on the big financial platforms. We're not on Schwab's platform or Fidelity's platform. You got to have a number of years of your life history, and we manage quite a bit of AUM. We meet that, but we have to meet other criteria to get on these big platforms. So a lot of what we do is, more grassroots marketing to advisors, advisors that have independency, that they can make choices on what type of investment strategies they work. So there is a lot of challenges with that. It wasn't as easy as I maybe envisioned it might be. But you know what? I'm a very hard-driven, disciplined person, so it keeps me awake.
Yeah. Well, and it's that also goes back to what we were talking about earlier in terms of purpose. You saw this other way that you could make a difference in this same industry by creating something from scratch, by changing the focus of who your clients are, but capitalizing on that tenacity and that hard work and that intelligence that you've brought to your work over all the years. So that's really important, and it's something that I see with advisors fairly often. I talk with advisors who want to continue running their RIAs, having their private clients, but they have a new entrepreneurial itch, or an itch to spend more time working in the causes that they care about. And they're saying, okay, how do I balance, those things out so that I can keep my private client business growing, continue, because in many cases it is their single most valuable asset, but also work on something new and different that allows me to scratch another itch and do something else that can have an impact in the world.
Yeah, no, it's exactly right there. Yeah, I mean, you're doing something a little different, and you did exactly what I did. I mean, I think it's interesting. You have energies to do different things, and as long as you're focused and you have a vision and put some work into it can be successful. So. Yeah. We've experienced some good success so far, but I feel we have a long ways to go, because there's a lot of growth ahead of us, and we'll capture that. It's going to take some time to do that.
Yeah. Well, Mark, it's about time to land the plane. But before we do, when you think of the ideal client for White Rock, what question should that person be asking themselves about maybe what they're doing in terms of managing risk in portfolios that would cause them to say, okay, this is good to give myself a chance to kind of step back and rethink how I've approached this. There's been a lot of wind in the sails the last few years that make it easy to just stay on autopilot. But is there some question you encourage those advisors that you're talking to ask themselves about the portfolio management side of their businesses?
I think, Rob, it's pretty much kind of like the vision I had. There's not a lot of well risk managed strategies out there, and you could bring something to the table that you could share with clients to show you what makes you different. I always felt like there's a sea of advisors out there. What makes you different from the whole sea of advisors out there? And I apply that same principle on the asset management side. As an advisor providing asset management services for your client, what makes you different from the one down the street? I mean, most advisors use asset allocated models based on age and risk profile. A tactical model's a little bit different beast. We actively manage risk, and we do active management around to meet needs of clients. So it makes us very attractive for an advisor to consider, that's different from what they may have seen in the past. That's why I encourage any advisor that I do contact with, hey, let's jump on a Zoom meeting and you can learn a little bit about what we do, because I think you're going to find it quite different and quite refreshing that, wow, I know a lot of my clients would love to see something or use something like this because they've been asking me for it.
Right.
I mean, that's kind of what it falls down to, I feel, as far as what makes us a little different. And,
Yeah. Well, I asked the question about questions because I really want the guests on this podcast to walk away saying, what did I learn and how can I apply this? Maybe it results in no change in their business, but at least gives you a chance to think differently. And you actually gave us two questions, I think. One is, what are you doing as an advisor to stand out from the crowd? Because if you're not careful, you can fall into that sea of sameness. And then secondly, when's the last time you really looked at the risk profile in terms of the way that you're managing money or assigning clients to other money managers, and have you taken risk fully into consideration in ways that you may not have thought of before when you were choosing your platform or your portfolio? So I think those are two great questions to leave our audience with. So let's finish up here. Mark, what's the best way for people to connect with you if they want to learn more about you and what you're doing, both at Hansen Financial Group and at White Rock Capital Management?
Yeah, so they could reach me at mark@hansenfg.com. So Mark at HANSEN, F as in Frank, G as in George.com. Or they could call me at 916-345-3555. And then our website is whiterockcap.net. So they could go on the website. If they want to set up a meeting, they could click want to learn more, and then it will notify me, and then I'll reach out to them and set up a quick meeting. So
okay, great. Yeah. Well, Mark, that's helpful. We'll make sure to put that contact information into the show notes that go along with this podcast. I want to thank you, Mark, for being on the show today. I want to thank our audience for listening in, and to remind you, as always, we are rooting for your success.
Thank you, Rob.
Thanks for joining us for this episode of The Purpose Focused Advisor. If you want to learn more, head over to our website, truestfancoaching.com. There you'll learn all about becoming a purpose-focused advisor. You'll also find today's show notes and links to the other gifts and resources we talked about during the episode. Again, thanks for listening, and remember, we're rooting for your success.